Frank, so we are first stream of the year, and indices are all selling off. Have you looked at what have you been thinking of all this sell off in Nasdaq, S&P, Dow, and even gold and silver?
Not a whole lot really. I don't really think anything of it. We hit our March 22 highs on the S&P, which was a pretty big level, and it doesn't surprise me we're selling off, at least early in the year. On the week, we're not even down 1%. So I mean, this doesn't look like anything concerning. I'm actually kind of glad, just so we can finally see some pullback. Because look at these past several weeks, have just been nothing but green. So I figure if we just wait on it and see what the news says this week, because we got a lot of stuff, could be potential. But yeah, I'm on looking at longs for these, same as usual. In terms of jobs numbers, JOLTS doesn't really matter to me as well. But I would say the meeting minutes is going to be pretty important as far as jobs numbers go, not JOLTS, but what do we have? We have NFP, right? Yeah, we have NFP on Friday. So I think at this point, if we get the talks of rate cuts, if that continues in meeting minutes, I don't know. I think we want to see higher non-farm employment change. Like we want to see better jobs numbers and dovish talks from the FOMC. JOLTS is not important, like I said, and PMI want to see expansion. So that's where I'm at right now.
Yeah, and I definitely agree with you with the indices. Another topic is that the dollar index seems to be breaking out here. Again, you had this like straight shot down into the end of last year, and now we start seeing. I mean, these are big candles. You're seeing some big pushes to the upside on the dollar index, and it seems to want to short term keep going. I guess one thing you could argue for.
Want to stay up to date with all the latest trading information? In the description below, you'll find the link to join our free Discord. The Discord gives you instant access to lots of helpful material like free trading courses, chart analysis, updates about what's happening in the A1 community, as well as discount codes for our other products and services. The best part, all of this and more is 100% free. So go down in the description below this video and check it out for yourself. If you're interested in upgrading to the full VIP Discord featuring our team of expert traders signals, you can use the live chat link in the description to get connected with one of our team members in seconds. So don't wait, go check out the free Discord today.
Is that there was that end of the year chase for a lot of asset managers, hedge funds. They wanted to partake in the rally, and so the train was going towards risk on assets. And I'm kind of with you. I don't necessarily think that this is a huge change in what we're kind of expecting for 2024, but I think it's fair to say maybe this is just a little bit of a relief push on like the dollar index pushing higher. And now we're starting to see some of those risk assets adjust a little bit. And notably, Frank, I added this little section on my trading view so I could take a look at sectors specifically. And what we saw yesterday was a big drop specifically in the technology ETF or sector within the within the Nasdaq. So of course, Nasdaq led the fall yesterday. It was the big names. It was your Apples and Amazons and Googles. The big names took a tumble, and so I think that is particularly interesting as we kind of go into the new year. But I think that I'm definitely with you. Markets went up for 9 weeks straight. It's probably due for a corrective move, and that could be anything from a 3% pullback to a 10% pullback. And I still think that the overall story is still intact. Inflation's coming down. Sure, you might get a little bit less growth, and that might be the story. The concern might be companies are not going to do very well this year or less well than last year, especially with how much markets pumped into the new year. It's possible that things just got a little bit expensive, and maybe we see just a corrective move in the first couple months. We'll see.
Yeah, I agree. I think something happened with Apple too. Is there something about iPhone demand?
I think that what happened with Apple is there's some drama about their Apple Watch. There's like some limitations. Also, Apple, I believe, is trading at like a 30 PE, and I just happen to have been listening to someone speak about the 30 price to earnings for Apple has historically been a time to sell Apple. And so it's possible that just Apple and a lot of these big tech names are trading at just very rich evaluations. And the idea of rate cuts is making markets excited, but there's totally the possibility. We know how markets can be. They can get overexcited and, overestimating when rates are going to come down. And, that extends to the yield story. We see yields trading up a little bit. You see the dollar index, like we mentioned, possibly finding a short-term bottom, but I think it should be interesting. Are there any currencies that you're watching right now, Frank?
Yeah, I'm going to continue to watch UJ. I
Hmm.
took a couple short positions on that last year, as in like last month, but I'm
Mm-hmm.
going to just keep looking at shorts on this. The dollar is just not, in my opinion, is just not strong. Um, and UJ, especially because Japan is different now in terms of monetary policy. Now that they have introduced that idea of raising rates. And
Mm-hmm.
that is still a question of whether or not they're going to do it. But um, the sort of shift in talks of that, how the US is talking about cutting rates, Japan is talking about hiking. Um, it's the same old story we were talking about a month ago, but um, things haven't really changed in terms of that. So I'm just looking at dollar shorts for the most part, risk off or risk on longs.
Yeah, I think that's definitely an interesting play for the new year. I think the yen has been so beaten down. Um, if there is a bigger reversal, and I think also a lot of the carry trade unwind, which is the idea of like people buying or shorting, borrowing from places like Japan. The Japanese yen is like the most favorite borrowing currency. People short it and then they go buy like the pound or the Australian dollar or the US dollar to collect a yield. It's the classic carry trade. It's probably one of the most popular Forex trades used by millions of people. That has been 2023 was a wonderful year for that. You take a look at like the daily chart. I mean, 2023 was a wonderful year for shorting the yen and buying something else and collecting a positive yield. And it's possible that that trade is losing its appeal, especially with these rate cut ideas. If they're gonna cut rates, that takes the carry out of the carry trade. It takes out the positive collection that you can collect on that, which I think if that unwinds, the dollar yen could drop hundreds and hundreds of pips. So we'll see how that plays out, but
Have you seen
should be
what was
interesting to
going on
see.
in Japan recently on
No.
the news? So they had like a 7 point something magnitude earthquake somewhere in
Oh, I did
Japan.
see that. I saw that on like Instagram or something.
It wasn't in Tokyo, but it was still, I think, pretty devastating. And they also had two planes collide uh,
What?
on
Oh,
the
isn't that the plane
right
that like
before
was
the
on
run.
fire or something?
Yeah,
Oh my gosh. Yeah, I saw
all
that.
of the passengers got out of the commercial plane though, I believe, which is
Yes, I
good.
think
But
that's right, which is good.
that's Japan's going through it now.
Yeah, for real. So we just had data come in, by the way. We had JOLTS job openings come in pretty much exactly as expected, and PMIs came out zero point 0.2 higher, so not too significantly higher. JOLTS, the previous number did get revised slightly. So this is not too market moving. We see on the like 5-minute chart, dollar index selling just slightly. You also had a pop on the S&P and then reversed it immediately. Gold did trade higher. Let's see where this is showing. You had manufacturing prices. come down somewhat meaningfully from expectations. Look at that. Manufacturing prices came down 45.2 compared to 49.5, which was forecasted. That's a pretty significant move there. Doesn't seem like too market moving outside of gold and oil. Look at oil, by the way. Oil trading higher this morning.
Yeah, that's a crazy move, actually.
I think one thing, Frank, that could continue to, if the S&P and NASDAQ are going to keep coming down, I think one of the things that could propel that further lower would be oil prices rising. One of the reasons that you kind of got this like perfect story into the end of the year, for those of you guys who aren't quite familiar with the way oil can impact markets, oil, if think about it this way, when you go to the gas station, you're paying a lot more for gas, and everyone the magnitude that it has on an entire population means that they have a lot less money in their pocket to spend, and that means that the consumer becomes weaker. That's not so great for stocks. It's also not great necessarily for the economy just to throw money into a commodity at a higher price. So oil came down like a lot, and that helped with the stock market rally that we saw in November through the end of the year. If oil prices find a bottom here and they do start to come up, that could actually be a negative pressure as that reintroduces that pressure on the consumer. What do you think about that, Frank? Do you think oil prices, I mean, they've been so beaten down as well. If that rises, that could actually kind of tick up inflation a little bit, right?
Yeah, they're very correlated. Inflation and oil is, kind of the same thing, I guess. Just higher prices.
Yeah.
And that's a big consumer item that everyone uses. So yes, that's definitely true. I was looking at gold though. I wish it would come down a little more. But it's reacting pretty well to this news initially. But I think it's still, if it could come down to this trend line, I think I would honestly want to get in, but it may have just missed it. So we'll have to just keep looking at it.
Frank, I definitely I put out kind of my outlook for 2024 video, and I'm definitely on the bullish camp for gold going into this year. I think that, with possible economic slowdown, with rates likely to come down, that environment could be really good for gold. And I think that, gold hasn't seen nearly the same, love that the indices have. And I think that we talked a little bit about how maybe things are a little too optimistic for stocks. And that's why we're seeing a little bit of a pullback. But I think that leaves room for gold to see a little bit of a boost this year. So I will definitely be trading, and I'm sure you will as well.
Speaking of gold and Bitcoin, I think Bitcoin's got its year this year, but don't take it from me because I could be very wrong. But it had a great year, and today was a really bad day, but that's just how it goes sometimes. Like you'll see these 5% dips in one day, and then it'll be coupled by these higher levels. I was saying in December that I think by the end of December it would hit 48, which it obviously didn't. But I still think 48 is a good target for it, just because I'm not going to zoom out, but it's a very it's like a very obvious level. It's a previous high from last year, I believe, or 2022. So yeah, I think Bitcoin is going to do well, especially with
Frank,
monetary policy.
Do you think you'll be trading Bitcoin, or are you more talking about maybe swing trading longer term, or what actually would you do with Bitcoin? Would you be looking to buy it on dips? What are you thinking?
I don't necessarily believe in Bitcoin in the long term as like a long-term investment in something that holds the same value as, let's say, a stock or gold. But I like trading in that direction if I see the upside, as in if it's dovish in like Fed sentiment and stocks are doing well and gold is doing well. Bitcoin is like the leveraged version of that. So it's
That's true.
a good way to trade, but once you trade it, it would be probably best to take your profits when you get them, and then wait for another opportunity, because it's not just going straight up like we saw in 21 and 2018. You'll just get these pops, and then one day like today will just be a huge dip. So this could be another buy opportunity for higher levels in the future. But I would say I'm probably going to just trade it in that direction.
Yep, that's totally fair. Especially like you said, if you have kind of a more bullish outlook on equities or just generally risk sentiment, Bitcoin is possibly a great way to trade that and get some extra, kind of extra reward for your risk that you're taking. Of course, like you said, it can have those big 5% drops. So I'm kind of in the same camp. It can be a trade for me, but I'm not really like a Bitcoin super believer or anything like that, especially when you kind of look at it. It's like 2021 was the year of just absolute pure risk on, nothing could go wrong. And of course we saw what happened with 2022. So you have to be careful with that stuff. In terms of inflation right now, we'll do a little quick inflation study. We'll take a look at the dollar index just in its isolation. Take a look here. The Fed wants it to be at 2%. Okay. 2% is the Fed funds target for inflation, guys. That's what it's going to take for the Fed to stop rate hikes and get into the rate cut territory. They don't want inflation under 2%. They don't want inflation over 2%. They want it just right. And 2% is their target. So in that case, what we see happening is that we've taken this ride together on this channel. We've covered everything going on for years now, obviously, but we've covered this whole rate hike cycle, which the rate hikes did seem to have some effect. We now see inflation coming down meaningfully. The question now for markets is inflation going to bottom out and start coming up again? In which case we have a huge problem on our hands and markets will sell off dramatically. You probably see gold down huge, S&P down huge. Or inflation this year, does it continue to moderate and come down to that holy grail 2%? That's the question that we have on our hands. Fundamentalists, this is what we are watching. Inflation is a huge metric for us to watch. So is jobs numbers here on Friday. By the way, NFP Friday, 2 days from now, we will be streaming the NFP event. If you want some more live coverage, I just want to encourage you, make sure to hit that thumbs up button and subscribe. But we are looking to this data to continue to confirm this idea. Now, the Fed meeting, FOMC, I'm sorry, not the meeting. We have meeting minutes, okay? What we want to see is what I just illustrated. For what do we want to see for FOMC? We want to see that the Fed still thinks that inflation is coming down meaningfully and will reach its target in a meaningful amount of time of 2%. That's what we want to see. Okay. So that's a chart for you in preparation for today's meeting minutes. I will be back live streaming for FOMC this afternoon. We'll come back on. We'll cover, we're going to do PMI numbers here this morning. Is it PMI? Hold on. I think it is PMI. Yeah, PMI and JOLTS jobs openings both coming out here today. We will be streaming up to that news in 20 minutes, and we'll be streaming later today for the meeting minutes to see if there's something that meaningfully comes out of that. But again, charts that I'm looking at today, keep an eye on the inflation study. Are we going to reach the 2% target? And I have my sister, Julie, she does our marketing. She's watching this stream right now. This is the chart to share today, Julie. She does our Twitter, by the way. If you're not following A1 Trading on Twitter, we put out charts from the Edge Finder, studies, research. I'll tell you what, one of our company goals in 2024 is we are going to overhaul market data. We are going to make market data more accessible to the average trader than ever before in 2024. That's the goal. The goal for A1 trading, just so we're clear, we are going to deep dive, double down, triple down on data for you guys as viewers, as customers who support our campaign to build better software tools. And yeah, thanks for your help, Julie. Yes, between Julie and Frank, they do a great job. I'm the video guy. Julie and Frank are more the readable contents team. So when you guys read along with our newsletters, if you're on the email, if you're in our Telegram, again, there is just free value galore. And we expect, here's two things that we're coming more. Two things coming to you in 2024 from A1 Trading. More market data, three things. Actually, two things. More market data and better content than you ever have seen from this YouTube channel and our readable content. More free stuff, more helpful resources, more education for free. The name of the game for us in 2024 as a company is more market data and more free value to our followers.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free Edge Finder, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.